Hello, my name is Victor Lloyd Burgess, and I'm a financial educator, lecturer, and author. Welcome to Expose, a financial investing reality. Here we talk about the economy, we talk about wealth, we talk about finances, investing, taxes, insurance, asset protection. We talk about lifetime income, tax-free income, retirements, and Roths, and any other things you or my clients ask me about. Just make a comment below what you want to see next, and I'll try to get to it. And like I have always said, let's cut the crap. Forget the hype, see the reality. I use Excel spreadsheets to verify, prove, or expose misconceptions and false claims. You need to trust in the math, and that's why I use Excel. If it works in Excel, you probably got it right. Math equals the truth, and the truth is in the math. This is my background. This is my legal disclaimer. And don't forget, subscribe, like, share, and ring the bell. That way you get notifications as soon as my next video comes out. It's free, and it supports the channel and helps get the word out. So please, help. Today's video, tax planning with the Tax Swamp Calculator. As seen on the Tax Swamp video on my YouTube channel, how to use Tax Swamp Excel Tax Calculator. In this video today, we're going to look at updating the 2021 IRS Form 1040 with the changes since the second video came out. The 2020 calculator was the only one available from the IRS when I made the video. After the video, the 2021 came out. So you need to update, for those of you who built your calculator, to the new 2021 tax calculator. The video Expose the Swamp is how this all got started. Expose building the IRS Form 1040 calculator was the next video. That was 53 minutes, while the Swamp was 1 hour and 17 minutes. So the current video today, I'm not sure how long, it depends on when it ends today, but this is your do-it-yourself tax planning with Excel in 2022. So we're doing the 2021 taxes. It's now 2022. You have to get that done by April. How to use the Tax Swamp calculator. Super simple and easy planning in only 10 minutes. Imagine something happened with your job, something happened in your life that affects your tax situation. You want to know how that impacted it. Or you're thinking about doing something like putting something into your 401k or doing a Roth Conversion, stuff like that. How would you like to be able to do that in like 10 minutes and less? Because you can do that with this calculator. Standard tax deduction is going to be covered, itemized deduction, IRA 401k contributions, charitable giving using a legacy plan, and even more. So let's go to Excel and get this thing started. Now, let me bring up the Excel spreadsheet. You probably have something on the left side here that looks something like this, or should have something like this. Now, what we did, if you remember, we only had the 2020 tax form at that time. Now it's in 2021. So you need to go to the IRS website and download the 2021, cut it up in pieces just like we did this one, and match it up to your cells here. And in the building IRS calculator, 53-minute one, we had covered building the 1040 calculator, which is here, and also the federal tax calculator, which is right here. And I put them on the same sheet, made it simpler. You can put it on another tab, it doesn't matter. But this way here, your calculation comes down, the taxable amount shows up here, comes over to your calculator, calculator calculates it, comes back out, puts it right back in your 1040. So as soon as you change anything here, you automatically see it change right here. Now, I'm going to take out some notes, the covering of the notes I have, because it kind of clouds up the calculator, as you can see. But I made notes here because I want to make sure I don't leave anything out in this video. So I'm going to go in a little bit here. Okay, we just showed the calculator, which is the 1040 calculator part, as well as the federal tax part here. Now we're going to explain the notes. If you remember in the notes, by the way, these are internet links that come in handy when I'm working with this or talking with somebody about this. There's links here. You can go to the forms and do the things. I put them up here so they're there and they're handy. You can do whatever you want with or without them. What we talked about when you built the calculator is the notes section right here. Now, normally this would be blank. Let's put this one back here. There we go. All right. So now that's how that works. You can use this or not use it. It's handy. Or you just put your notes here. But you're supposed to go back 1 or 2 years, maybe 3 years, up to you, and look at your tax returns. Look at your 1040. That's all you really need to look at is your 1040. And you're looking for numbers that are in here. If there's numbers in here, wherever there's a number, you need to find a note for what that cell means. Now, most of all you need is written right here what it is. Taxable interest, ordinary dividends, right? If you need a certain table or whatever, your standard deductions are right over here. And the married here is $25,100. And then you can start doing tax planning. You can see here that I have red and blue. Basically your tax plan is done right here from 1 to 16 in the red. And pretty much all you need there for tax plan is there, because that calc takes you all the way down to your taxable income and then your tax on that taxable income. But there is some changes here that apply to some but not all, like AMT, that can increase your taxes. Now, once you've calculated your taxes from the tax table, if anything happens down here, it still increases, it adds taxes onto what your tax table said you owe. So that's why that's in blue. So basically it's all done here. Then it's your 10 W-2 forms, 1099s and stuff like that. Then your refund and everything. So let's see. Explain column J. Okay, here's a big one. On the last video, I ended up with my formulas for the 1040 being on column I. And in column I, the I looks like a 1, depending on the font you use, and it gets confusing. So I ended up inserting another column back here and moved it out, and so now my line numbers are on I, and my formulas are on J. The other thing is, the new 2021 picture you're going to get, your JPEG for your 1040, used to be 10 ABC like that, is now just 10, and the 12 that used to be just the 12 is now 12 ABC. So you have to update that, line your cells up. The other thing I added that really helps out a lot is, see this plus minus and then plus and the green and plus minus? Well, your pay can go up and down. That changes your taxes. So this could be a plus or a lower number. Instead of minus, it's lower. You lost income. But here it could be a positive number or a negative number for your capital gains and for your business profit and losses. So anything you put in these plus sides will add to your taxable income. Other three here can either reduce or increase your taxable income. Then you have here, the first one in the pink is minus. This is when you do an IRA or 401k contribution. It's going to lower your taxable income. And then that becomes your AIG. After that, you have your standard itemized deductions, which is your charitable giving, and your standard deduction and your itemizations. That will not lower your AGI, but it will lower your taxable income, which is here. Okay, so that becomes very important when you're doing your tax plan. And so you just put your notes there. Show the updates of the formulas. Okay, let's see the updates. What I'm going to do here, for those of you who haven't built your calculator yet, you're going to have to go back to the other form, and you can figure it out from here too if you watch this. But go back and build it. If those of you already have it built, you're going to have to rebuild it for this year. You do it once a year. You rebuild it. As you know, once you have it built, it's only going to take you about 20 minutes maybe. The first time might take you an hour. The tax table, you don't have to really build that every year. You just have to update the data for that year. So let's look at the formulas. I'm going to go formulas, and I'm going to go show formulas. And if you hit show formulas again, it's just going to undo them. So it's a toggle, on and off, on and off. Okay, so let's put the formulas up there. Now, the formulas right here are for using, if you're going to put this one in, these labels here. So wherever there's an X, you can take the labels in and out. If you're not going to use that, don't worry about them. Don't even type them. Just type your notes right there. You don't have to type these a whole bunch of times. You just type it once right here. If W30 equals an X, it sees the X over there, then it says put that information right here in this note. That's all it says. And then it has double quotes there that says if it doesn't have an X, don't put nothing there, so it's blank. Okay. All you have to do when you type this one is copy it down like this, as far down as you want to go, and say Control down, and it'll copy them down. You don't have to type each one individually. However, here on this side, you have to type each one individually. Okay, but now it's on the J, and now it doesn't look funny when you look at them. Let's go here to 26. So these are your formulas from line 1 to 24. Let's say 26, okay, to 26. Only the gray areas have formulas, okay? Now, the blue here is because I just said that this guy here equals this guy here, and the output equals that. So you just type these formulas in just how you see them. Move the cells if you have to match the sheet over here, of course. And so let me go down here and let's get the rest of them in here. 25 through 26. So all these formulas are here. Type those in. Now this is a little special guy here you don't really need. So this is your EIC. It's asking your birthday. You check here if you're born between these 4 years. It does something different. Most of us don't get earned income credit. It's if you have a low income. So you don't really need that one, but you do want to type this formula here. It's halfway between. There's 3 cells in between here. It's the center cell here. Equals J50 minus J49. Type diff or difference here and tax controlled standard deduction here. Because this is what you're going to use this when you're doing your tax plan. It just helps out so much, and I should have put it last time, but I didn't have it in there. I had it in my master one that I used, but I hadn't put it in the training one. So I want to make notes to make sure I did it in this one. Okay, now let's see. We have show federal tax table. All right, remember on the tax table too, when you're doing the tax table, these are not formulas. See where all the blanks are? They're not formulas. This is where you're going to type in the year you're using, whichever the year is. And remember, your cheater sheets are right there. I keep copies of my cheater sheets down here. This is the first page. This is the second page. And I can always just come down here. But if you remember, the tax tables are right here. This is where you this here is where you get these and these. This is information. Married, joint. You see the first one single, head of household, married, joint. You just take these numbers and type them in right here. Okay, the year 21, whatever you're using to file, the numbers you need, the standard deduction, which is right over here on this particular form. This is a Morgan Stanley one. It's a PDF. Remember on the training, which you just Google tax form. Actually, you Google 2021 or whatever you're looking for, tax table PDF. And then you go through the selection and look for tables that look just like this or not. There's lots of them out there different ways. And you just get something clean that just shows what you need. So that just goes right there. Then I'm going to go ahead and turn. You're already zoomed in to get the formulas. So let's zoom in here if you want to get all these over here. Okay. This is 1 through 27. These are my notes. And if you want to put those notes on a sheet, you can put them on there. And then down here is the last of the notes through 38. So just zoom in and copy those down when you have some time. And now I'm going to turn the formulas off. Formulas, show formulas, to turn those off. Down back to tab form. And now we can get started on some tax planning. Show standard deductions right here. Now, on the cheater form here, of course, you have the standard deductions listed right over here. On the 1040 itself, the standard deductions is right over here, and married, filing, and joint is $25,100. So I'm going to go over here to standard deduction, which is line 12A, and put in $25,100. Okay. Now I also need an income here. I'm using $450,000 because it's big enough to see some bigger difference and see how the tax works better. And this is the formula I asked you to also type in and label it. All right. Because what I have here now is I have a total income of $450,000, and I'm taking out the standard deduction, which is what most of us use because we're not doing itemizing or charitable giving. If you do either one of those, then of course you're not going to be using your standard deduction. So we put a standard deduction in here. It comes out of your gross and goes here into your tax calculator as $97,804 as your tax, and that comes right back here into your 1040 as tax from the tax table. So what I like to do is set my control, because everything I do tax-wise now, going forward, is going to be based on, did I increase or lower my taxes, right? Now, you may, if you have taxable interest, what I did here is I put the 450 here, 250 as income, like I have an account of investments, so anything I'm investing, I'm using that. So I just put some percentages here, so I put some realistic numbers. So if I got, let's say, 1% on my savings or something that's not, that's really 0.5% now, 1%, it would give me like $2,500. So under taxable interest, I can put $2,500. It's kind of a reasonable number. And then for my capital gains, let's say I had capital gains and stuff, I put 3% for capital gains, so 3% 250 is 1350. It's just so I have some kind of realistic numbers in there. Of course, only your numbers matter to you. That's your numbers. And that changed the taxes here to $111,000. Okay. Now I could use that as a base because I already know I have my W-2 stuff. If that's part of your ad, you can put those in there and you can see what your taxes are. And now you're going to do some planning. Can I reduce that? Can I do this? And you make that your base. But so you can make whatever your control is your control. Okay. Right now, what I want to do is just have the standard deduction. So I'm going to come down here and I'm going to click in this square. Now I'm going to right click it and copy it. Right. And I'm going to paste right here. I'm going to right click and paste 1, 2, 3. I just want the value. And now you can see the little formula here changed to a 0. So now my base is zeroed out, and anything I do from here, it's going to go up and down from the 0. See how handy that is? So now that's a standard deduction. So, and set the control. So that's called setting, I call it setting the control. It sets my control for my standard deduction. That's why my note here is tax control standard deduction. Okay. So now I can start doing some tax planning. I just want to see what happens when I put a contribution into my 401k. Now, with the $450,000 income, a lot of people are the most common thing when I talk to clients and stuff and look at research and studies is about 3% of their gross goes into the 401k. Okay, some people it's up to 6, but 3 to 6. So I put 3% here to get it. So it's $13,500. So this is my 401k contribution, which is line 10. You can tell by my notes here, right? So $13,500. And now I can see that when I put that contribution to my 401k, my taxes went down by $4,502. So basically, I saved $4,502 off my taxes by putting that contribution into my 401k. Okay, so that's how that's easily done. Now, you might ask, well, what if I did a Roth conversion, right? So let's take the the 13,500 out of here, delete here, and now I'm back to 0 difference. And instead, I'm going to take some of my IRA I have on the side. I'm going to take that IRA and I'm going to pay part of the taxes on it and convert it to a Roth. So it's going to build a tax-free income. Your Roth conversion comes in here. My notes, again, 1099 business profit and loss, rentals, Roth conversions, your EDD, all comes in on the same form here. And if you look over here, it's a Schedule 1, line 10. So Schedule 1, line 10, everything's kind of combined there. But for our purposes here, we're assuming no business, no rentals, and all that, but we're doing a Roth conversion. So I put my $13,500 here is that I paid my tax. And now I've increased my taxes by $4,725. I'm paying a little bit more, but people want to know, if I do a Roth conversion, how much do I pay in taxes? That's it. See how fast that is? Almost anything you want to do, you can do here as long as you understand the 1040. All the other stuff doesn't really matter, but it does. But there's stuff that's out there, and you need to actually do your taxes to catch all those little things. So the better your tax guy is, the better his software is, the more they're going to catch. But for your rough tax planning, it's right here. Okay, so that's a Roth conversion. So now let's get rid of the Roth conversion. And I'm back to just my 25,100. So I got a 0 difference here. Now we're going to do W-2 refund. Okay. When you do your calculations here, you have your taxable income comes here, your tax from the table comes here. If you don't do anything here, don't get hit with AMT, you don't get hit with any other stuff, self-employment stuff here, then that's going to be your tax. Otherwise, anything here will increase that tax. It's going to be tax on top of your tax. Okay. So your W-2s go in here. I had just pulled out $102,000, and I just did that by looking at my tax, multiplying it by 105% just to give me a refund. Okay, so they say they took $102,694 out on your W-2. Then they take that out of your tax liability, which is the $97,804. You subtract those down here, and you come out with your refund of $4,890. Otherwise, if you didn't have anything in here, you'd owe the full amount. So now that's what you look down here. It's either going to be you owe it or you're going to get it refunded. And there's stuff here that changes this. So if you had anything in your tax return that had numbers in any of these spaces, then you want to look up what that is and you want to make your note there. Now, if you have my notes there, you'll have an idea what it is. This also tells you like Schedule 3, line 15. So your schedules and stuff are here. That's why I put this picture here. So you have the latest working and they tell you what your formulas are supposed to be doing. So make sure your formulas are right. Okay, so now we've got the refund. Now we're going to do charitable giving. Now, if you look down here, you see standard and itemized deduction. And I have notes over here to the right. It says charity. And it says itemized. You ever heard of Pandora's box? Well, once you do something that you're going to make you get out of a standard deduction where you can open up Pandora's box, which is your itemized deductions, then a whole world of itemized deductions start coming out for you to be able to use. Until then, you can't use it. You're just stuck with your standard deduction. So you get automatically $25,100 if you're married and joint taken off your taxable income at get-go. So that's pretty good. But you can get a lot more off maybe with your itemized deductions. And if not, then you're just going to keep your standard. And that includes if you're doing charitable giving or anything else that triggers it. If you do your itemized deductions, which is on Schedule A, if it's not over the $25,000, just stick to the $25,000. However, if it opens Pandora's box for you, let's go to Schedule A. Now, this is what Schedule A looks like. And I got notes and stuff over here. And you do the same thing. You just paste the picture of it here. Line up your cells like it shows on the video, and then it calculates this. Now, the top part here is your medical and dental deductions. Now, there's a thing here called 7.5% of your AGI. So they're taking your AGI from here, right? Now, notice your standard deduction, itemized deductions are under that, but your 401k contributions are above that. So anything up here will either increase or decrease your AGI. Anything down here will increase or decrease your taxable amount, but not change your AGI. Follow me? So on your Schedule A for itemized deductions, multiply line 2 by 7.5. Well, it's saying multiply your AGI by 7.25, and that gives you a spread. And that means, and this spread on $450,000, $450,000 is $33,750. Now, in order to increase, which means you got to have more write-offs than $33,750. Follow me? And the only way to reduce your AGI is by business losses given to your 401ks or IRAs or pensions, and having capital gains losses. Any one of those can lower your AGI, which will reduce your spread from $33,000 to something lower. You don't get your medical and dental until it's above the 85. But now you've opened your itemized deductions. So what I have over here, you have Schedule 1, line 10, and Schedule D, line 21, which it helps you with your lowering your AGI. But after that, you need to look at increasing your medical and dental things. So what can you write off? There's a publication called 969 Health Savings Account and Other Tax Information, and Medical Health Savings Cash Dental Expenses here, and I put that link here. Well, if you go to this link, all right, publication 502 Medical Expenses, now when you scan down here, you'll come to medical expenses are includable. What? Now, it starts with abortion, acupuncture, alcoholism, ambulance. It's all alphabetical. But you can see as I scan down here, there's like 198 things you can do. And it covers all of them. So you just scan down here and start reading bandages, braille books, operation and upkeep capital expenses, drugs, diagnostic devices, eye exams, glasses, hearing aids. I mean, there's they cover Medicare Part A, B, and D. What can you and can you not? And when you click on one of these, legal fees, learning disabilities, lodging, long-term care, the more medical issues you have, the more you can write off. And if you have something that's costing you real expensive medications, seeing a doctor a lot of stuff coming out of pocket, you definitely want to do itemized deductions just to get past your medical part. Now, I'm going to close this here. It's 198 items, and in my notes, I have them here, so if the internet's not working, I'm talking to somebody, we can scan down, and there's basically 198 choices you have there. So, like I said, you're opening Pandora's box. So that's just the medical part that's on your itemized deductions, okay? So you have to get past this 7.5% of AGI. Then you have your state income or state taxes. Real estate taxes, I put rentals example, is other than your personal property. Your personal property tax goes here, and then you have a cap, $10,000. So any of this is above your cap, you can't write it off. It's capped at $10,000. Well, here you can change your cap. Any foreign taxes or generational skipping tax, which is your GST. If those have them there, you can actually raise that cap and get a little bit more there. This is your 1098 for mortgage interest. Mortgage interest is not on your 1098. Points go here. It's not on your 1098. Mortgage insurance premiums go here. And so that's your mortgages. Then your 4952, which is your investment tax, that can go in here. If you're doing a legacy plan or a charitable giving, that would go here. And you see, like here, I have example. I put in 200,000, and that full 200,000 is dollar for dollar. So you're reducing your taxable income dollar for dollar here, but it's not affecting your AGI. So it's below your AGI. And so with your other expenses, so I put some generic ones that are kind of in the ballpark of where most people might be. And that adds $26,500 to it. So now when I go to put my legacy tree in where my standard deduction was, it's not going to be my standard deduction. It's going to be this output line 17 of your itemized. You're writing that off, but it's whatever you get out of your itemization. Like I said, the more medical, the more things you have here, the more you can write off. So that comes over here, and it goes right in here where standard deduction is. So let's say I'm putting $200 in. My itemized deductions come back with $226,500 because this is actually looking at line 27. So over here, I don't get my $2,510. I now get my $2,026,500. Now you can see my taxes from my just standard deduction has dropped $56,000. My taxable income is at $223,000. But for your medical up here, your AGI is still $450,000 because your medical, your deduction is underneath. Now, if you put something here, right? IRS. Now we do that. Actually, I'll put that in as example. Let's go back. My 401k was $13,500. So let me put the $13,500 back in there, and now you can see with or without it. Now you're at $59,386, and you've changed your AGI a little bit. It's not $450. It's $436. But you haven't got enough you don't have $32,000 worth of write-offs yet. And until you go through this, you might be able to come up with them, okay? I have lock and unlock. What you want is every place here where you have a form. First of all these cells, when you make the spreadsheet, are defaulted as locked. So you're only going to unlock, highlight, and unlock. And like this right here, these I want to be able to type stuff in here. So you go to, I want to lock and unlock your sheet. So you want to be able to lock these cells. So let's say you want to unlock these cells, right? Then what you're going to do, well, I got to do it here first, is I have to now unprotect my sheet so I can do this edit I'm getting ready to show you. So I unprotect my sheet. Now it says protect sheet. If I hit it again, it protects sheet. And when that happens, it's going to ask for a password. When you lock it the first time and any other time, it's going to ask you for a password. Do not type a password, but select lock cells and select unlock cells as a minimum. If you have objects and stuff you do messing around with, just say edit objects and I'll let you mess with those without having to unlock the sheet. So don't put a password in, say okay. Now the sheet is locked. If you go back to review, you say it says unlock the sheet. Well, if I want to format these cells as unlocked, I got to do that. So let me unlock sheet. I highlight these ones I wanted to be able to type in. And I say home, okay, go to format cells, go to protection. You can see here, those are already unlocked. Normally they would say, look just like that, and it says locked. You just unlock them, then say okay. Now these are unlocked. Then you go back to review, and you say protect the sheet. Do not put a password in. These will remember what you selected here, say okay. Now it's protected. Now I can't type up and mess up this format. See that? You can't mess it up. can't mess up anything. The only thing I can type or change now is those. If I type words in there, it messes up the calculation or something, but that's all. So now I'm good to go. Same thing down here. I usually keep this all locked, and then once a year I change it so I don't accidentally change these formulas here while I'm messing around. So now you have that part. So now we're going to go to my advanced cheater sheet for taxes. So I'm going to go over here in my other tab where I have that sheet. So it's basically the same thing, just a lot more notes and a lot more stuff. So here's our $450. Here's our $1,350 for your IRA contribution. Your $126,500 for your charity, but this time we're doing legacy plan, not straight out charity. Put the $200,000 in, it's just gone to charity. We'll reduce your taxable income by $200,000. This one here is what's called legacy plan. Is you want to give to charity. A lot of people want to, but they can't afford it, or they don't feel they can afford it. And so with a legacy plan, you can donate to charity, but get that money back through everything that happens here. So I'm going to go over that right now. Now with my advanced spreadsheet here, or my more complicated one, I have here where I have my gross. What I'm doing is I'm taking out your cost of living and all that stuff here because I'm working with it. You can't. This is for people that don't want to go over their total income. Some people, when they do charitable giving, they might give their whole year away if they want, because you can go up to 100% of your AGI. All right, so here's my legacy plan. I'm into the legacy plan. I'm giving $200,000. $200,000 came into the legacy plan. $100 is going to a charity. $26,000 is going to a 401k. So the $126,500 is the deduction on itemized deduction, and then $100,000, another from the $200,000, is going to go to your deferred retirement plan. And in there also we had the 401k deduction of $13,500, and your total retirement plan now is $113. So you're given 100, and you're putting 126 into either charity or 401k, and you're putting in 100,000 plus the 401k to which is 13,500 into the legacy plan. Now, this is designed when I'm talking to people, they ask a whole bunch of questions. They want to know every different combination, and that's what all this stuff is doing. So we're just going to skip down to the bottom of this, and this is what I mean by opening Pandora's box, right? Look at all this stuff. So we're going to come down here to the bottom, which summarizes or sums all this up. So we're taking $200,000 contribution, but we're putting $100 to charity. We're going to get nothing back for it. You're giving it away. Away it goes. And then, but $100,000 we're going to put back is in the plan for us for later, for our retirement. Now, $13,500 was what you put in your 401k. That's deferred. And this $35,362 is the tax savings you just had. That's tax money back in your pocket that you weren't going to have before you did this charitable gift thing. So you have a total of $148,862, which is these here. It's your deferred money. So you take your $100,000, it's getting deferred. I'm putting it in a FIA, fixed index annuity in this example, because it has a guaranteed 7% per year compounding interest roll up on your income benefit. So I know for a fact in writing that I'm going to double my money. It's 7.2 is really doubling, but basically I'm doubling my money in 10 years. Then I'm going to take the 401k contribution. I can put it in an IRA, I can put it wherever I want it. I got to grow it at something. Now I just put 4% here. In my next video on what to expect on market returns, it's going to blow your mind away. Make sure you hit that bell to get that. But I'm going to talk about why 4 is reasonable, and anything other than that, you're poking at the stars. So you're poking at the stars anyway. So that's growing at 4%. And then for the savings account money, if you put it in your savings account, you bought some bonds or something, that's that one. So because these are money that, because of what we just did with the legacy plan, we have available to grow. Now I'm growing everything for 10 years. So over here is your 10-year returns. So it grows to, between the three of them, $255,760. Now that's if you get your 4% here and if you stay with your 1% or get your 1% here. These are not guaranteed. This one is. Okay, so that means over that 10 years, I had this $148,000 basically growing at 5.6% annualized rate of return, compounding interest. So $225. Now, if I add the 100 to these ones, that's $248,000. My legacy plan, between the tax savings, what I put in my 401k, and the one I deferred in my plan, $248,862. Okay, that means if this 4 and 1 work out at least near this, or better, or a little bit worse, we're somewhere around $6,898 ahead of the full 248 we started with. So that's what I'm talking about, is you get back more than you give. Now I have a video on that. It's 41 minutes. Get back more than you give. The 2020 CARES Act. The 100% of your AGI is based on the Secure Act and the CARES Act. And that's where this came from, and we'll call what I'm calling a legacy plan. If you did this every year, like you're saying, well, I can start giving to a charity. You always want to do it, but you couldn't do it because you can't afford to lose that money. If you're in a situation where when you do this, you can stomach that better. Now you can start giving your charitable giving because you know you're going to get it back over a 10-year period. In the end of 10 years, you're going to get it back. So you repeat that. So let's say you're 60 years old now. You're probably going to retire at 70 these days. So that gives you 10 years. That's why I came up with 10 years. So you give $100,000 to your charity. You put $100,000 in your retirement. You take your taxes you saved and your 401k that you did, and you grow those for the next 10 years. 60, 61, 62, 63, 64, up to 70, right? So 61 to 70, you're doing this plan each year. So when you hit 70, the next year, the first year that you did it at 60 kicks in at 71. Then so the next one kicks in at 72, 73, 70. So now for the next 10 years after you hit 70, you got these plans kicking in, giving you income. Okay, so that's why I say give to the charity and pay zero. If I put, like I said, it's 100% of your AGI. So if you put whatever your AGI is, 100% of it, you don't pay any taxes. Okay, if you do a combination like I'm doing, you're going to pay some taxes, but you're trying to recoup the money that you're going to give to that charity back for your retirement later. So that's like a win-win-win-win-win-win. So give to charity and get it all back is what I called it. That's why I said get more than you give. So now let's see, another important thing, the table. Now you can do this table on yours too, on your tax cheater sheet or whatever you want to call your tax calculator. What I did is I have copied this here, items 1 through 16 over here, 1 through 16. See that? It's the same exact stuff as here based on my notes here. Now, when I set my my core, right, with my standard deduction only, what I did is I simply take this from 1 to 16, I right-click, copy, then I bring it over here, and this is a table I built, and all these cells right here are not locked. So then all I have to do is left-click here, select a cell, then right-click it, and say paste 1, 2, 3. And it's going to paste just the data. I'm not going to do it now because it doesn't match what I have here. It's going to paste that data here. And then I have some calculations down here so I can see it. So right now I have a charitable giving over here, so I'm over at this side here. Let's see if that matches up, 53.8. No, it just doesn't have the 401k in it. So what I do is I can label up here whatever scenario you want to build or compare to. We just made all these changes, right? Every time I made a change, it changed the calculation. Well, if every time you made a change, like you did taxable interest, dividends, you did a 401k, an RMD, whatever you did, whenever you put that IN in and changes it, you can now copy this 1 through 16 and paste it over here under whatever you labeled that as. So what I have labeled here, so I have standard deduction here. I have maximum IRA here, which is the $7,000 here, plus the standard deduction. You have your maximum 401k, which is $26,000 here, and your standard deduction. You have your Roth 401k, which means, and I make a note up here, so I just say what it was, $26,000, because there's no place to put it, because it doesn't change anything. You're just taking your after-tax money and putting it in a Roth. But you still have your $25,000 deduction. So that's why your tax bill goes back to basically your standard deduction one, and the taxable and the tax savings the same. So you can see here your tax savings go down. Then I have the Roth conversion. Now Roth conversion is different. I have to put my Roth conversion here on line 8, which goes with your property, your business profit and loss and stuff like that. So that goes in there with whatever else is in there. But here we just want to clean. We just do it by itself. So now I can see that my tax went up and my taxable income went up. So my savings went away because I paid the tax on it, and I put it away to a Roth. Then I put capital gains in here. I have a 15 here, just to show that one. But you make whatever scenario, and then these are the legacy plans. Now, the first legacy plan is to get money back, right? The second two are 100% charitable donations. And one is, so I put 150 in here, I get it back. I put 300 here to lower, just do a pure charitable play to just lower my AGI and taxes. And here I had to put 424 in because I had 2,600 in my 401k to get my AGI to zero. So in this scenario, you pay zero taxes, but you gave most of it to charity. So that's how that works. It's very powerful, great to do. And now, let's see, I think I covered it. No, I don't. There's some more we want to cover real quick. Okay, so married, file, and joint. Some people don't think about this, but every time you do your taxes, unless it's staying the same year to year, no difference in doing it all the time. But you want to at least know if you filed married separate versus married joint. Okay, so let's look at that real quick. I'm going to go over here to here. Now, what I did here is this is my table again where I was just cutting, just pasting in. But I made this little calculator here, and you can do the same thing. You make this calculator. It's not hard. You're going to understand it as soon as you see it. I just typed my $500,000 here. Okay. Matter of fact, let me just do formulas, show formulas. Now I zoom in, copy this calculator. It starts with C, column C, and then column D. You have to be in those columns, and you're starting with A5. So you got to make sure this is on A5 for this to work if you're just going to copy these ones. So you just copy these directly in here, the calculator is going to work. Okay? Formulas, turn those off. There you go. So what I have here is I type 500 here. Then it's going to do the joint calculation. And it's doing it because I have these calculators fixed. What I have is joint, married joint. This calculates the married joint. I have spouse 1. This calculates married separate, spouse 1. And this calculates married separate, spouse 2. So those are my calculators. There's 3 of them I have to do to get this thing to work. So you're going to have to build these calculators as well. And you're going to put, you know how to build the calculator ready. And that's why I made it so you can cut it and paste it anywhere and it'll still work. Paste in your federal tax returns, paste 3 of them in here, label 1 married, and just the tables are the blue right here. These are the ones you update. Put the update data for 2021 for these calculators. All right. And then you're married separate. So you got 1 married joint, 2 married separate, 2021 or whatever year you want. And the blue, they're highlighted in blue which ones you have to update for that. So I put $500,000 in here. It's going to calculate on this calculator the standard deduction, $2,500, and it's the taxable amount, $470, and the tax. See that? So that's joint calculation. Now down here is the spousals. Now I put a 2 here, and it automatically divides this in half. So each spouse is making the same amount of money. So, but the standard deductions, because you're filing separate, is almost right about half. And so your taxes are about half. And then they total these 2 taxes right here. So this is your joint filing. This is your separate filing. Okay? And this is everything's the same. So this is table number 2 down here. My denominator is 2. If I put a 1 there, it makes 1. It's a joint still, filing joint and separate, but it's 1 earner. 1 equals 1 spouse earning. And then that's this one here says 1. So I did 1, and I did 2, and I did 3, and I did it for 45,000, 85,000, 200,000, 500,000, 650,000, all the way up to 2 million. Okay, and I just had to type these in as I did the calculations. That's all I had to type in each one. So they're locked. Okay, so like if you look here, 500, and then I have age 60 and age 65. So I changed this because the standard deduction changes at age 65. It'll go up. Okay, so I want to see what they're at 60. So I did the 60 first, and then I did the 65. And you can notice here, all of them are positive. So out of these 9 combinations, 9 out of 9, filing joint obviously beat filing separate. Why? Because you simply moved a $500,000 income from a $25,000 deduction to a $12,000 deduction, right? So obviously it's going to win every time. So, but where it comes in, now when I did the 2, I did it 50-50. And then what I did is, what it showed there is, you can see here, at age 65, if it's red, negative, then filing separate, you made more money. So at $45,000 a year, filing separate, you saved about $205,000 more, and at $2 million, $9,000. Down here in the middle, 700, like that. And filing at age 60, I was Steven, up to $650,000, and then filing separate, I saved about $1,900, $3,900, $8,300, $8,300. See that? Now, with the 3, what that does is it just simply took 1/3 to the one spouse, 1/3 to one spouse, 2/3 to the other. So you stayed with the same 500. And by doing 1/3 difference, again, at age 60, all the way up to $650,000, filing married won. But at age 65, all of a sudden, only the 2 here married did. Otherwise, it was better to file separate. And then if I just leave this open, I'm talking to somebody, and let's say my guy says, I'm making $280,000. $280,000, need another 0. I'm doing $280,000, and my wife, or vice versa, the wife is the one that's a breadwinner. It doesn't matter. That's why I say spouse one, but I should just say partner one too, right? Try to get really correct. And let's say the other one's something low, like $64,000. Because the closer you get to about the same, the less it makes a difference about separate. Follow me? So I can see right here that joint wins because $200,000, $64,000 is $344,000, $344,000. So the tax for filing joint is $64,000. The tax for filing separate is $75,000. So that's $10,000 more you saved by not having it up at the higher tax bracket. What you're doing basically is, you can see here with the 64 and 280, well, the total is 344, right? And then you take out the 25 if you're filing joint, it drops down to 318, so you get 318 over here. So your taxable income for joint is 318. However, the 280, it's a 12,000 reduction, right? So the tax was 267. So here's calculating the 267, and then the 64,000 is at 12,000 deduction, 55. So it's counting at 55. So your taxes are only 51,000 here, and so it stays at a lower part. Like here, you see you're up to a tax table of 24. Here you're up to a 35, and here you're down at 22. So your actual taxes you're paying, this is 20% is your realized tax, 25%, and 13%. See that? So that's why you have to do these calculations separate. So I can put any combination of a couple I'm talking to, and see, and then the denominator is not used. It just puts this over here. And I can see which tax scenario wins for them just at the tax table side of it. Okay, so that's really important to remember. Now let's go back over here. Oops, we're back over here, and then show iCalculator. Okay, now here's the other thing that's really good. In my, and this is, we're wrapping up here. In my cheater things up here, I have this iCalculator. What's really good about iCalculator is it goes over here to it's a third-party website. When you go on to here, you want to scan down and say, I would like to estimate my federal and state tax withholdings. You don't have to download anything or join this or anything. This part's free, so don't hit the downloads or anything. Skip this. Now you can go down here, say use advanced tax calculate options. Okay, pick out the year you want to do it. This is earned income credit. This is gross cafeteria. This is gross tax deferred. That's any kind of retirement plan. So retirement plan we're using was $15,300, right? I think it was $15,300. Your annual salary was $450,000. Okay. And then if you're over 65, if you're blind, your spouse is blind, your spouse is over 65, married filing joint is what we were using. Put too much in a retirement plan here. Still need to take off a 0. There, 13.5. And number of dependents, if you have that, you fill that in. Now, your state, you can put your state withholdings and your federal withholdings here, or just leave it blank. And then say calculate. Okay? And then it brings up these really nice things here. It shows your income, tax deferred retirement. Exemptions, here this is the $25,100 per year. Federal tax was $92,722. Remember? These actually match up with your tax calculator exactly. But anyway, it goes in your adjusted income. It tells you how much Social Security they were supposed to take out, how much Medicare they're supposed to take out, additional Medicare, salary after tax, what's left in your pocket. Your federal due is this. And if you put in how much they took out, they tell you how much your refund was. Your state, your Medicare, and your Social Security, how much they took out. You keep going down. I didn't put state of California in. This is Alabama. But then it tells you about your Alabama. This is your table for Alabama. Calculate your Alabama taxes or whatever state. Standard deduction for federal. Deferral. Here's your tax calculator, the percentages. But it just has so much stuff in here that you might want to take out, especially if you're interested in calculating Medicare and all that stuff. I built my own calculator that does that, but this one here, it's like really easy to come over here and do it instead. Your tables, telling you what tables you're using. But it has all this data here, so it's really neat. And then, of course, up here, when you, let's go back real quick. You said, I would like to do this. And then it said, here's where you would have picked your state. I should have put California there when I put my gross salary. Then you say use advance. Pick your date here. Okay. And then hit calculate when you're done. Okay. So that's really interesting. So I think that's pretty powerful. It can help with your tax planning. So you don't have to build like all the really advanced stuff that I did, because there's a lot more stuff you got to change each year. And that one there takes it to it. So let me double check down here. I believe that's everything. Show I calculate. It is. So I think we are done for today. How's that? So don't forget, subscribe, like, share, ring the bell for the notifications. Okay? It helps a lot. It doesn't cost you anything. So share it. If you like this information, you use it, show it to everybody. I mean, everybody can use this. It'll make a big difference on what they're doing. And I don't like to say it's the end. It's just a short break, right? So take care and be safe till next time. And I'll see you then. Take care. I love you.